Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for October 29th, 2022. I just want to publicly acknowledge Ken H. for allowing us to share his personal coaching process with us, and Chi Wang Chong as well. You really are doing us a service, and we are grateful. I'm reminded by this little piece of parchment of the context in which we do everything. It may feel sometimes like it's a blank slate, but when you look closely at the world, there are ripples and context and texture to it, the canvas on which all our actions are taken. I'm reminded in the Tao that things come and go, yin and yang, and I'm reminded of that you got to empty your bowl periodically to receive new gifts, like this picture of a from 1,000 years ago, a picture of 6 persimmons. It's just perfect in every way, and that the path to mastery of skills is a deliberate one. It's a marathon, not a sprint. Sometimes it feels like you're climbing a mountain forever, but there are ways in which that we can understand what our experiences are providing us as a way of learning. We can examine what it is that we think we know and develop conscious competence, which leads to a state of releasing and unconscious competence. And that we recognize we have multiple ways of knowing things, and we're going to incorporate all of those in our journey. And that in true storytelling circles, we generate safe, trusted, truthful spaces in which we can exchange our knowledge with others that are committed to excellence and performance so that the people may thrive. And we recognize that trading is a craft and that it is through the exchange of information in sessions like these that we all get better. And so I'd invite you to empty your bowl and figure out what your story is to add to our little process. I'm reminded of the journey that Bill Scheidt and Jeff Boccaccio have been on. This is from Bill's briefings last year, almost this time, and his annual review of all his different performances on different systems. Were all rock solid, had superb results, and he's built on that to develop a bulletproof, a very solid and robust approach to trading crypto that supplements what he's doing with our long-term blended monthly rebalancing and swing trading. And I'm just really proud of him and Jeff um, putting these things together and continuing to take each next step as it comes. I'm really proud of them and admire their work ethic. This is the context of the market that we're in right now, the daily hydraulics, if you will. This is about the last, I guess, probably a year or so. And as we talked about last night, we're in a condition where we have reasons to hope that it can break through the RL 270, which is in a strong decline and has been in this bear. There have been significant rebounds that have been tradable that all felt like we had seen the bottom, and each of the last 4 or 5 times that has not been the case. So we are mindful of our indicators to help us find those turning points in the recovery and recognize that we're in a compound critical state right now, and there is a greater than normal probability of a larger than normal move in either direction setting up on the swing trade time frame. And so we should go in with our eyes wide open and our hearts clear and our hands steady. So with that in mind, I want to jump into the trade, and by way of context, on this canvas of our life. That's what's on my mind. I'll start with Chi Weng Chong's outstanding work here with the sector slopes, and we're seeing the recovery unfolding right in front of our eyes, especially in energy, which is now leading the way up. Finance remains in second position. Materials doing pretty well and is making the metals exceptionally tradable right now. The S&P and tech have made over the zero line, so they're in the positive. And when you combine that with this almost caught a two formation, that's the reason for optimism. But we know we got an election later this week, and shenanigans can occur, and that's going to cause a massive resettling of the assumptions about the economic and policy framework going forward. So more short-term volatility is in order. It would be the least surprising thing that happens, and that's why the compound critical state mentality has us ready to react directly to price action and to set our preconceived notions aside. In fact, if you could just give those to others and just clear your mind in that empty bowl, you'd be glad that you did. The S&P and the staples are leading the way right now in this growth versus the staples. We have moved into the condition right here where the staples, the defensive plays like Walmart, Home Depot, Coke, McDonald's has been smashing it, are leaving behind the consumer discretionaries, which tend to be growth oriented and high tech. This is solid news for the market getting better on the backs of our great mature service and goods providing companies. And that's a solid foundation that should not be neglected. So I think that's another reason for hope. Jump into Ken H's charts now with that little bit of market context. Ethereum, boy, he framed this one just so nicely. Golly. There's your long slide with the PSAR. Notice how good our PSAR settings are. That was him on the way up and then downward. Leg 1, leg 2, leg 3. Bottomed out just slightly above the previous support level. So you almost see like a little kata 2 forming and the first burst on the weekly. That feels like a support level for sure. And he buys the SSC and the next leg up, and he's holding a reasonable position here, still in the money on 2. He's got a stop located where it should be, so he still makes money even if this fails. I might be ready on this one, Ken H, to minimize the damage on that one by bringing that stop to here, your call. I'd be ready to add at 11 because this thing has a long way to go to get back to something like normal. That we're not going to see 22 for a long time on that one, but on this little risk box right here, in a breakout above 11, I think the top of the dragon, as you've noted, and the top of the RL30, say 1250, that's a real possibility, and that's not it getting frothy. That's just recovering something like a reasonable 1250. So I think this was an inspired entry with the SSC, a nice opportunity with markets money to double up. I consider that the tactical space. That's looking great. Nice work on that. The Qs have been in that long slide on the weekly, with lower lows and lower highs. So this is coming up to test at 285, an important critical state. If the market bears win, this rolls over. If there's genuine relief rally now that the election is almost over, then that move to 315 can happen, which is about a 10% move. You can see he's. I think he stuck around a little bit too long on this one. I wanted to see you out here. I'm pleased you didn't add a second position, but I think on the second test here, I'm thinking we should have been out in this region. Now you gave it a couple opportunities to fail further, and so we walk out of there with cash money that can be used to pay for that one. But yeah, I would rather see you in this bear market where tech has been vulnerable, taking those shorter steps. But where you are right now, you're in the money on this one. I think I don't want to see you lose money on this one. That would be bad for the psychology. Somewhere in this region, north of 275 to 278, I think you got to have your stop. You cannot let this one go to zero. If this is the speculative engine for you, then I'm not offended, but I just that's a little bit loose for bear market trading inside here, I would think. Netflix has shown some real resilience here after the harsh sell-off and a Kata 2 formation on the weekly. This is looking reasonable to the upside. This long consolidation zone is this one. So that's got real merit. That has real merit. And then the next really long-term target on this one is 380. And you're looking at 300. So that's $80 on 300 is 25% potential. I love that. And I want your stop. I'd be happy to see that stop up around 290, I think. Let's make sure that gets locked in. That's your money right there. And I think I'd be anchored to this one. That would be pretty tight. But if it violates here, then that's going to negate all of this. So I think I'd say 290. And I'd be ready to go again at about 302. If it clears that, I think I'd be ready for more. Because this has definitely cleared resistance. And now there's no resistance in here whatsoever. That was just a straight drop. So you don't get any resistance until about, 380. So this thing is free and clear, it's ready to sprint through this. I would really make this a priority target for the swing. I just think that has some amazing potential. And you've seen almost 10 days where it's held above this that vacuum level right there. So yeah, I like another position above. Say 302. All right, next one up, we'll take a look at so Adobe. This is tech kind of crawling out of the pain and suffering here. This was, I think that was a reasonable short, probably a scratch, stop and reverse. Second position, I think you need to have your stop. I think I would have it right about here. You could tolerate a bit of a loss on that position because you have such a nice entry on that here. Um, but my concern is that we're facing a logical place um, to see some resistance. So everybody that's owning it from in here, much like yourself, um, it'll take something special to make it start making that move. So you could see this as a temporary way station for everybody that wants to preserve that move. This is new territory, and you can see on the daily that this hasn't really followed through that much. So I don't think I want to let it go below here, three. I would call that 315. You got two positions on, which will pay off. And if it does get through, say 330, then that thing's gonna go. That's some commitment, and then you don't even see resistance till 370. I think you're all right. Energy with and this is ExxonMobil. This has just been so amazing. Energy has just cleared this, or ExxonMobil has cleared the trading lane between 85 and 100 and is into new territory up in here. And on a weekly basis, looks like the move is just beginning. Right. Your latest venture on this one, adding the second position, quick exit, beautiful reentry above the statistical resistance. That's how you do it, fellas. And off we go. Um, I this is so pricey right now that that the price action in me just looking at the chart says I want to add at 110 and then use that market's money as a balance, as a ballast. I would just say go for it and just trade the chart. Leave your notions about energy behind. I just think that's a great looking chart. What a nice trade. He trades what he sees, fellas. That's what he's doing. Sun power, solar, the strong weekly base with periodic bursts, and then a collapse back into the base, which is where it is now. He's got an SSC. I like that. I think your initial stop was probably here with about a $2 risk. I don't have a problem with that at all. You might say, look, let me take that risk off the table, with the idea being that if this actually rolled below 17, you have reason to believe that move is not going to happen. So maybe your stop is at 17. Yeah, I think you're all right on that one. I think I'd take a little risk off. All right, this is Coca-Cola. This is reflecting that strength in the staples. It says something about our nation and our culture and our diet when Coca-Cola is a staple. There's your PSAR flip. That's the earliest he could get in. It's still looking good. No, I don't mind that. You know, that was after an extraordinary sell-off, and then there was reasons to believe in this, and then an earnings gap. Yeah, might we have gotten a slightly better entry in here? Sure. But if your risk is down around here, that gives you almost 2R to the top of resistance, and it's Coca-Cola, which everybody has to own. And when you see this formation here says, obviously, that's not the correct price for Coke. Not obvious, but it should be up around in here. So no, I think that's fine. That's Coca-Cola. You get some implied strength. My stop would be right there. I'm always going to say take risk off the table, collect bank when you can, and then that's how you have chips for later for adding. So I like that one. I like that one. McDonald's, just say no more, fellas. We've been hitting the bullhorn on this one for weeks. So now what can we say where we are? All right, here's resistance, 266, and we've broken through that. So 266 over here is this. That's clear. I'm adding here. I want to see the S&P up. I want to see XLP better, and I want to see McDonald's thriving. That is people buying this thing on sale, and it has cleared the resistance, and it is above the week. This is just a winning position. Just hold your nose and go. You know, it's stocks like Coke and McDonald's and U.S. Steel and Alcoa that when you sense those imbalances and you see those support levels, these things trade with so much money in them that once that momentum starts, man, it is hard to stop. As each little piece of the curve gets, each guy that's a little more reluctant finally gives in and buys it, and now we have cleared all that. And on the first day of a burst out of that thing, I think there's more energy in it, if I'm being honest. Verizon has been a wickedly volatile symbol, which is making the turn on the weekly, stabilizing at that price level around 36 on the daily, and is now moving out towards resistance at, let's call that 40. So 40, which is up in here, is the reasonable upside, 39.75. So to me, a box right there is 1, 2, 3. A breakdown is 1, 2, 3 to get back into here. I like that one in either direction. You see how fast this thing collapses when it collapses. But both of these actions feel like chasing all the weak hands out, and there's some optimism in here. So I like this one as a critical state. I have like zero directional bias. I'm ready to collect 3R in either direction on that one and just follow the price. Especially if we saw if the S&P is down tomorrow and Verizon is worse, pound it. It's very vulnerable to the downside. Amazon, they got smashed on their earnings, and people are taking advantage of that to buy it below 100, and that ought to tell you absolute fearlessness in holding that over the weekend, and the next stop is 112. So at the first hint of goodness, pile on. Are people going to stop buying junk? No, I'm not. Honeywell, classic tech, love these guys. The only issue I have is at a resistance level, but that has been spectacular. This is the argument for the SSC and standard risk box, and when it breaks through resistance, an opportunity for second positions, and now here's a chance for a third position, and there's plenty of room for this to get back to 218, 220 is the next target to the upside. So I'd like to have been better at getting this, but like Pokemon, you can't get them all. But those rising lows tell no lies. This is the easiest money is gone, but Honeywell should always be on your list in Techland. They are just so well run. Man. The real estate, now this is earlier stages of recovery on a brilliant asset class that is just, it's stuck in the, if you treated that as the trading range, it's in the bottom 15%, and a base has been established around here. And you got a couple Kata 2 formations, and all it has to do is break north of this to get to here, and it's paying a 5% dividend. I mean, easy. And you can convert that to a long-term asset allocation position with markets money. Finance, along with energy, has been leading the way, and that makes this feel pretty solid for market upside opportunities. So you got a couple legs already in. Ken H has it already. I'd be ready to add here. I think once it breaks above here, the next target is up here, and you're in great position. Keep going. And if it breaks above 35, that is not resistance until you're up into this area. I'm liking it. Banks will be taken care of. Cross-country healthcare. I wished we'd have had the Kata 2 or the Kata 2. But we're in this little rising triangle above 38. That's just free and clear. The first sign of it crossing above 38, even 38.50, there's a lot more room in that thing. There's nobody wants to sell that. You couldn't persuade them to sell that. Finally, XPEV, Chinese electric company. This is corresponding to the absolute smashing of the Chinese equities. Can they let that go to zero? No. But you got a double bottom. As a speculative play, looking just to get the first leg in for a 3R justification and then see what happens, sure, why not? It's not going to go to zero. I mean, it'll go to 12 before it goes to zero. I mean, at some point, that's your logic. All right, great work, Ken H. Appreciate everybody's kind attention. We'll get this published and posted, and look forward to seeing Chi Weng Chong tomorrow morning. Take good care, buddy.